The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Monday morning, and I'm back at home, or one of the places I call home. So, Florida, man, got stuck down there, and the flights are now back in order. But guess what? It's sleet and freezing rain tonight, so the airport's going to get shut down again. Okay, we had a rate cut in China over the weekend, and we got to talk about that. We got to take a look at what's affected from that, and we're going to take a look at the Shanghai really quick, and we're going to just kind of go back into the long-term view, just remembering that we started seeing this breakout potential on the weekly around 2100. And the dailies, again, as we look at the long-term view, we use the next kind of ratcheted down view, in this case the dailies, just to give a little bit of history lesson here, to regulate the trade up after the breakout on the long term. And we use this as an intermediate kind of speed bump situation to try to figure out where to put stops, to try to save some money at times on that long-term view, i.e. one of the areas that we looked at. I'm going to blow this up a little bit here. One of the areas of concern on the intermediate was around 23.43, but on the long-term weekly, this particular product continued to power up, and I'll show you that. And we caught that good bid after we had broken out around the 2100, 2150. We caught a really good bid going down to maximum support there, and I think you guys were we were doing the show when this was going on back in October and saying it was possibly time to back up the truck there with stops down below. I think we missed it by 4 points there, but just to kind of keep moving forward here, and just wanted to make a point there on how to use these profiles. But as we have been kind of trudging forward here, there's been areas you could have saved a couple of points on the intermediate view, but recently we had talked about this important level for another breakout and retest around with noise around 32.29. That happened the other day. We went a little bit farther down in the trough that I wanted to see, but now we're obviously, every market loves a rate cut. That's they don't look at rate cuts anymore as the economy's slowing down. They're looking at rate cuts now, I guess, on every level as in another sense, free money. Isn't that weird how that works? That's just the whole tone has changed. So as we look at the Shanghai and as we look at the breakout above daily profiles and the reason to trade that, we talked about waiting for that breakout. We're going to look at some of the other markets in Asia really quick, and we're going to look at, where's my Nikkei? There we go. All right, so the Nikkei we talked about recently around this 18,205 area that closed above, new breakout, and the regulation of that trade up. We may see a chance for a new profile appearing here, and that's the only way I'd say that we have a chance to trade this. So we're just kind of waiting patiently. We're seeing an orange bar appear, and as we look at our scanner, we're going to look at a couple of things here involving the Nikkei. We're gonna notice, first of all, that we've got our yellow cell appearing. That means we're more than likely going to have a new profile appearing on a daily, which will be new inflection points to key off of, which in this case, in my opinion, is waiting. We're going to have to wait and see if we form that profile above price action, below price action. Forming a profile completely below price action in this case would really be very bullish. But if we are kind of bracketing, as we call it, that price area above and below unfair highs, unfair lows, we're going to more than likely be looking at those unfair lows as support and waiting patiently for a pullback, for a an inflection point to key off of. So as you can see, we're kind of getting into the bottom of our profile here. But as we pull up our landscape view, and I had them take these charts off until they got the profiles in that we were kind of showing hints of the other day. But as you can see, daily got that yellow cell up there, and we're sitting right at the bottom of a profile here in our 240. But when you see these yellow bars appear and these indications that we're going to have a new profile, you just need to sit tight. That's kind of a stalling feature in itself, saying that, hey, we're going to have new supply. As we look at the Nikkei, we're just going to pull that up on our breadth situation, and it's down at the bottom. You know, all systems go here. These are the internals of the Nikkei. This is 225 stocks crunching numbers and trying to get some outputs here. And as we look at the Nikkei, as you can look down the numbers, we're just we're looking long and strong. I don't know how else to put that. But as we kind of gaze through, we're going to take a look at the Shanghai really quick, and we're going to, you know, this has been just the ultimate breath positive buy support thing forever as we look at this. But again, that's the Monday morning quarterback view. We've been talking about that all along the way. If you haven't been following along, this has just been something that we have been able to block out the short side of the marketplace easily. Okay, so that's a little bit of the situation in Asia. I mean, if you guys want me to go through the Hang Seng, I will, but I'm starting to realize nobody trades the Hang Seng too often over here in Asia. That's actually a big deal. Let me read some of the notes here. Okay. All right. So as we, you know, understand that a rate cut means lower confidence. There's a lot of things that I could say, but in summary, that means a stronger dollar. And we could go through the litany of how that kind of unfolds and works. But as we look at this dollar, we've talked about don't be short, block out the short side and look for long opportunities. And told you my stops, you know, on the intermediate level below 93.67. That's getting to be kind of a decent span down below there. But how do we, you know, regulate that trade? We got a new box appearing 94.99. Let's just call it 95 is new support on the dollar. We got to pay attention to that. And not a big fan of shorting the dollar. And as we look at that, we got some really good moves on the yen last week, Friday, in fact. And or actually, that level of 119.44 was breached, closed above, and I'm going to blow this up for you. We talked about waiting patiently on this, excuse me, relatively thin profile on the yen. This is our daily view. Excuse me, folks, let me get something to drink. And as we look at that 119.44, we had that close above, we had the retest. So again, those are the powerful situations you can kind of get yourself into, is on thin profiles, not really trading the noise inside and waiting for that move above that profile high or coming down into the bottom for support. And we had that happen back in the middle of February. We didn't have a close above here, and that's kind of the, you know, you can buy breakouts as they happen, but the stronger signal, and that was a, you know, pretty good little reversal there. But as we have a close, then that's the more confirming situation, and then the retest. So, you know, is the yen going to power up again? You know, this is just calling a spade a spade. This is the kind of action you want to see from the long side. And now, you know, you can orient stops again below 119.44 on the yen trade. And as this, as these pieces interconnect with each other, we've got to take a look at the U.S. Treasuries. Obviously, this is not bad news for the U.S. Treasuries. And as we're looking at this, still 128.04 coupled with 127.27, that DMZ down there. Below that area is where I'm putting stops. And again, this is, we opted out on shorting around 129 just because I'm not a big fan of going short treasuries. Caught a good move there from the bottom, getting back above that DMC, but we found some support again, and that's just, excuse me, that's just the way I'm looking at the 10-year and the 30-year, by the way, and this was the weekly situation on the 10-year. The 30-year, just to give some numbers, 145.28 is where I'm putting the stops below on the 30-year, and I know there's a big disconnect between the June contract and the March contract. Somebody's saying they opted in on shorting the 10-year around 129, and that's just a little bit. Let's see, that was that 129 area, John, and that's trading. We got up there, just touched it almost, and pulled back, but again, I'm still trying to look at these treasuries from the long side pretty much exclusively, especially after we kind of ramped above, and that was more of a short-term trade around 129 for me, but I just opted out on that one. Okay, so let's take a look at one more thing as this may be affecting the gold market. We're back up, and this is kind of critical here, so we're going to pay attention to this. 112.22. We've reached a high this morning of 12.23, backed off a little bit. Just to kind of get some go-go juice going again, we're going to have to close above 12.22. In my opinion, right now, gold is still a sit tight, even though we kind of gravitated back off of this 1,200 area that was pretty important in the past. 12.38. is the next level up if we close above 12.22, and that, in my opinion, is going to be big resistance up there right now, and any closes above there are going to have to be seriously paid attention to from the long side. Right now, I still think gold's a little bit no man's land situation, so that's kind of, gold should have reacted a little bit better to this news than it's acting right now. All right, as we go to break, we're going to take a look at crude oil in just a second, but as we go to break, we're going to come back, look at crude oil, look at a couple other things, then we're going to get into some stocks and some of the U.S. indices. We'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And we're going to take a look at a couple of things here. We're going to move into the S&Ps really quick on this segment, and then we're going to get into some stocks later. Now, interesting, we were talking about this when I was in Florida. I was in a trading room down in Orlando at the tail end, a little bit longer than I wanted to be down there. But we were looking, some very serious guys who are trading, large fund order flow. We were kind of going over the mechanisms of the scanner, and they were able to use this they think they were going to be able to use this moving forward to try to, they're one of their MOs, trying to say a million things at the same time here. One of their MOs is to try to beat VWAP, and that's volume weighted average price, if you guys don't know that. And there's a lot of things to talk about with that, but I'll just try to make it short. One of the things that, a desk that tries to beat VWAP, what are they doing? They get a big order from a fund, and these guys traditionally get 100,000 shares of Google to sell. So what they'll do is they'll say, yeah, we'll guarantee you a VWAP, and that's all the fund generally wants is that VWAP price, which is kind of a daily mesh of where the middle ground is for the day. They just want to get out of 100,000 shares of Google in this instance. And what this desk will do is they'll come in and say, okay, we'll guarantee you the VWAP. We'll give you the VWAP price. And because that desk is a broker dealer and able to do principal trades and agency type trades, if they can make, and they're taking on risk when they do this, if they can beat the VWAP, they'll give them the VWAP price and they'll keep the spread on the money that they made trading, taking on risk against that VWAP. So on something like Google or anything else that they got coming down the pipe, they were highly interested in being able to use this particular tool to be able to find out where to pick the battles on the shorter term. So there's a ton of risk in doing that. And if you're a broker on Interactive Brokers, a fund manager, I see Interactive Brokers advertising all the time now for registered investment advisors and stuff like that. You can actually pick algos on that terminal to give you the VWAP, and what that basically does, Interactive Brokers and quite a few other folks have created are algorithms that go in and just execute that Google for you and basically whittle it down during the day to where they're going to get extremely close to the VWAP, and that's really all those funds are hoping for. So, these guys, 100,000 shares of Google, if you can make a nickel, that's it's a nice little payday for the day, just getting some trades executed. But again, they're taking some risk on. They might make 30 cents. So what is 30 cents of 100? So you're talking 30 grand. If you can, that somebody said Thomas Petterfy he has built a fabulous business at Interactive Brokers. There's no doubt about that. But these guys are singing for their supper, so to speak, on the executions, and it was very interesting to watch how that unfolded as the stress was on the face there of a couple of traders there trying to unload that amount of stock. So here we go. Here's the Brett situation too. They're also trading about 50,000 sides a month of S&Ps as a hedge also. So not only are they trying to trade out of the stock or trade into the stock, they're also trying to hedge their situation, especially if it's a high beta stock, based on very knowledgeable, John. That's interesting that you know all this. You must have been around the block. They're using S&P 500 futures also as somewhat of a hedge to try to clip off some extra points, or to, not have to, when they guarantee the VWAP, not maybe having to suffer too much if the trading part of that, given them the VWAP, is going against them. And 50,000 sides a month on S&P 500 futures is not a small amount. So was pretty impressed with what they were doing with all the little lights and bells and whistles going on. So we were looking at the breadth here, talking about the S&P 500 futures, and we were noticing some cracks. And, to be honest with you, this is the first time we've actually started seeing these cracks, and the daily's actually getting ready to possibly start rolling over. It hasn't happened yet. Would be nice to see a confirm there. We're going to talk about this a little bit more after we get back from the break as it relates to the S&Ps and the profiles on the S&Ps. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And what I'm doing here is showing you a little bit of extra information on the Brett situation that we just hinted of a while ago, and this little bit some cracks in the armor here. But what I want to show you here really is the last week when we were starting to get around that. What was the level there? Let's see. When we had the new box attempting to appear, this is our daily. And we were talking about this new profile that we thought was going to come into force here. That happened on Friday, and now we're sitting right at that 2099 area, kind of bouncing around there. Because of that Brett situation, my screens are not exactly where I want them. When we were talking about that last week, we were in the 40 area on below the box here, right there. And I can't figure out how to use drawing tools on here on the hot comms, so I can't circle that. But right there, this area was around 40, 42, 45. So now we're at 95. And if we look at our Brett chart, which you guys have access to, we're just going to kind of look at this. I'm going to take the middle ground out. As you can see, the middle ground's starting to spike up here. And this is our situation on the Brett charts. Now, we haven't crossed over, and that's the stronger signal, especially on the intermediate. The weeklies are still just, the long-term trend, and as far as breadth goes, is just not in danger right now. But we may have some intermediate trading opportunities on breadth. And when we look at the S&Ps, what does this all mean? So we're starting to look a little bit heavy here, as we started talking about last week, that we may need to see some new information, some new areas to kind of wait patiently for. And now, in my opinion, it's probably not the best time in the world to look at this from buying the dip, at least until we get down at 2084. And we're going to have to look at the daily breadth as we get down there, because if we get down there and the daily breadth is crossed over, we may actually bust through. So, what does this all mean for right now? That this to me means that we're not looking at this from the long side on the intermediate trade right now. We're just going to kind of wait patiently. One of the hardest things to do as a trader, especially if you're sitting in front of the screens and getting tortured all day long by looking at these charts, as I like to call it, is to sit and wait. And right now, for the longs, I think you need to pass on being in the marketplace and wait. And for the very shorter term situation, trading against a long-term trend up, you got a short-term trading opportunity, shorts down into 2084. We had looked at that situation before when we had an orange, and I'm just going to review this. This doesn't always work out. Had an orange bar, had a new profile, and boom, we closed above, and then all bets are off. But that was as breadth wasn't really completely coinciding with that new box attempting to appear. Now you've got some heaviness in the internals of the marketplace. And remember, excuse me, the internals of the marketplace are really encompassed in these speedometers. If you see this starting to fold over, especially if the chin is still sticking out on the S&Ps, I think you could really start laying some wood to the short side in the short term. Okay. I thought I said something funny with pulling a rabbi on my yarmulke. Nobody seemed to get that in the den. Anyway. All right. So as we look at as we look at the scanner again, thanks, Basil. All right. Okay, as we look at the scanner again, we're looking at the S&P 500, and we always want to take a look at weak stocks in a strong market if you're going to try to short anything. I'm going to pull up. This is one we looked at last week. We looked at Walmart, and we looked at this area right here, 85. This is kind of a little bit proof of concept. And this particular stock is sitting right on the precipice here, 83.48 now, of possibly really endangering this move up that we've had on some breakouts on Walmart. So something to pay attention to. In fact, I would kind of lay off trying to buy this here at 83.48, the maximum inflection point, and any type of market help would obviously help the concept of relative strength trading. And we're going to go in here and we're going to just look at some other situations that are, and I hope this rebalances, and there we go. As you can see, we've got a lot of stocks here now that are in the red situation on the intermediate. Now, S&Ps are still above 2,100, and it seems like we're just hoping for, once we come off all-time highs, CNBC guys, 20 S&Ps is, oh my God, we're having a correction. I mean, that's kind of the sum of what a correction is these days. But you got some trading opportunities, in my opinion. And let's just go down the list here. Let's look at, before we look at this really quick, I forgot to do this. I want to go through oil really, really quick. Had a lot of questions about that, and I forgot to go through it, but it's going to affect some of the things we talk about today. 45.91 is the big number on the bottom. This is the April contract. And now that we kind of stayed below here, 50.13 on the April contract, we're going to have to get back above that or start feeling good about oil stocks and crude oil in general. Right now, we could drift a little bit lower. We've kind of played this relatively well. Let's just take a look at the XLE. And this is kind of what we were looking for. You got to pay attention to crude oil, but we've got a relative strength trade on the XLE, 78.81, still that number down below for buying support. Remember, this has kind of shown its hand a little bit relative to crude oil, but as we mention all that, we're going to go back to our scanner and look at some stocks that may be ripe opportunities. And we're going to look at NRG Energy. This is an S&P 500 stock, and we're just going to look at this because it's bottom one, and 2 inflection points lining up. And I'm going to pull this up on our landscape view and see that we're sitting right there. So let's look up NRG. This is something you want to stay away from on the long side. And the reason I'm showing you this is now you've got, and again, things on their lows go lower and things on their highs go higher. Everything's possible. This doesn't mean that this is on sale, even though we've gotten down to this inflection point. Any type of market downturn or crude oil not moving back up, this is one of those stocks that is showing its hand, showing relative weakness. And just because we've had a pretty violent pullback into these numbers down below, this, in my opinion, may be something that could possibly do a flush. And here's where we're at down here, just sitting right below weeklies and dailies on the profile scene. Okay. Let's take a look at something else. Let's take a look at Southwest Airlines, LUV. I like this 43.96, 44 stops above, and let this thing drift down. Let's take a look at a couple other things from the scanner, and we're just going to look at let's see here, Ralph Lauren, excuse me. There we go. There's the weekly, and here's the daily. And now you've got, let's see here, 137.96. Let's call it 138. That's going to be the stops above. This thing could go lower, eclipse recent lows, and maybe some points right there. It's a $135 stock. So again, relatively expensive. Position size that properly. Let's take a look at a couple other things here. State Street, STT. Here's the weekly. Had that weekly close 75, and I'm showing you these because remember, if the market does roll over, that Brett's starting to look a little precarious there. These may be some of the stocks that could continue to go south. And here's the daily situation on State Street. Just waiting for a comment there, John, on State Street. Anytime. You already mentioned Timber Hill. I'm going to take a look at a couple other ones. A lot of these property stocks are still just, on the radar screen as far as relative strength goes on the downside. We're going to take a look at, we looked at Walmart. There it is, sitting right there at that precipice on the weekly, as you can see. I'll just pull this up. We're going to take a look at RIG really quick. This is the weekly. Again, these are stocks that, that XLE and the crude oil trade, this is, probably something you want to stay away from on the long side. Not on sale. You got better opportunities. And what are the better opportunities? Let's just go into the scanner on the XLE situation. Let's go back in here. Let's take off our sort. Let's go back into the XLE. As this populates. And we're not going to do any sorts. We're just going to kind of look down the list here. Oh my goodness, I forgot to take out the S&Ps. Hold on. Now we've got the XLE up, the XLE components. And here we go. Anadarko sitting right at the top of the box now. APC. CAM, Cameron International Corp. I'm kind of looking at stocks that broke above weeklies but are coming back into support possibly. So let's take a look at Anadarko, APC. And here we go. So if I'm looking at some oil stocks, and again, this is looking a little precarious here, but again, the weeklies take precedence over dailies, over 240s. In my opinion, you've got a decent little opportunity here around 83.50, stops below. And again, this morning, we're trading, I think, pre-market around 84. So that's something that's a relatively low-risk trade, in my opinion. Got to have some help from crude oil a little bit there, but paying attention to that XLE, you've also got that on support too. Paying attention to that. Let's take a look at, what was the other one we looked at? Cameron. Oh, man. Pulling up CAM. A little bit of a lid there on the dailies, but remember these weeklies. I like the way this is acting. I like the way it's, as Tom would say, building cause right there around the 46.66 top of the box there. Easily put stops down below there. If crude oil makes any moves up, this thing could fly. It would be nice to have a little bit of help there. Here's some more on the XLE. ESV, not a good candidate. Taking a look down the list here. Not a lot of opportunities when you see grays there, but you can just kind of go into the stack and take a look at this relative to the inflection points. It gives you the inflection points as if you got the boxes right on your screen, on your charts. Occidental, not a good candidate. Let's take a look at RRC, Range Resources. Okay. So what do you do with something like this? There's the weekly. Here's the daily. Let's take a look at where we're at pre-market here. 49.58. Sitting right there. Again, I think you've got some better opportunities in looking at the APCs of the world. A little bit more leverage there. This one's obviously not cleared and staying above weekly profiles on the stock itself. So again, you got better opportunities after we drill down into it. We're going to take a look at Valero, VLO. This is the green situation here. And we're going to take a look at Phillips 66. So VLO and PSX. Let's take a look at that. VLO. The gift that keeps on giving. And we had a new profile up here Friday below this stock. So again, the buy point now is 60.15. Still think you got to kind of wait and see on this one. This has just been a runaway freight train. Let's look at PSX. We'll come back right after the break and try to continue this conversation.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Here's the XLF. Maybe somebody can find out what unleaded gasoline futures symbol is on E-signal. I tried to find it, but I'll do some research on that. We'll try to cover it today or tomorrow if we can find it. Here's the XLF, that 2447. I still like this trade from the short side. And here's the weekly, 2451, 2447. That's kind of where the stops above, and maybe let this thing drift down to 24 and possibly even lower. Okay. Ultimate targets down below 24 and even 2312 on the XLF. That's what I'm looking for. Man, these are spiders bit my foot, or I'm stepping on a nail. It's weird. Here's the XLK. I just want to go over that really quick. Technology sector. Again, we busted out, closed above, and are marching forward. But again, we've got some resistance here, and we've got, this new box attempted to appear on, what was that, Thursday? That happened on Friday, and then we're getting some resistance, 43.21. And as we look back at the NASDAQ for this, let's just go back into some of the things right before the market opens here. We got about 2.5 minutes. Talked about this, NASDAQ new profile appearing below. That's relatively bullish. This thing just, obviously looking a little bit more ripe than the S&Ps in general. And let's go back into the scanner really quick. Let's just take a look at the breadth on the, let's clear this out. Boom. And let's go back here. And let's look at the NASDAQ. A couple of cracks starting to show on the NASDAQ too, as you can see by the speedometers. And as we pull up our internals, we can see that getting a little bit of a rollover situation here. These are only 100 stocks. It's a little bit smaller sample set, but starting to show some non-coordination here, even in this particular product. So, wishful thinking on this will be a retest of 4,400, but not a lot to grab onto here yet. Here's the 240s on the NASDAQ. As you can see, to regulate the trade up. First breaks down below 44.43. That'll be the first time we've actually broken down below profiles on the NASDAQ since, Jesus, oof, good gracious, back in 1st of February. So this could be the sell-off point on the NASDAQ to go back, meet that 4,400 area if we can just get back down below 44.43. So you might be able to pick up a contra trade on the short term against the long-term trend up. And that's the situation on the NASDAQ. We gotta look at the DAX. Again, we talked about this. This is probably going to continue to elevate with the euro continuing to go north here, or excuse me, get devalued. Here's the situation on the 240s on the DAX. 11,339 support here. If that's broken, we're more than likely going to start seeing 11,195. But again, looking to the euro, going to hit that pretty quick. This is something I wanted to talk about. Here's the kind of the gift that keeps on giving. We talked about this 114.47 up top, but here's the weekly. We've had that close below. This is very, very important. That close below now, which was the targets, initial targets down below 112.45, and now we're going back and trying to retest that. Again, things on the lows go lower. This thing can go lower. And to me, now this is your new leverage point with stops above for this to continue to drift farther south. Okay, guys, you've been great. Steve Rhodes is next. He's back. Hang around. Thank God he's back. We'll see you again tomorrow, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.